G'day folks, and welcome to a check on chain update for the 10th of June. I've just landed coming back from Bitcoin Seoul, and by far and away, the biggest topic of conversation was Bitcoin Treasury Companies. Now, there's a handful of them that actually spoke, CEOs and various representatives from them, but also it was just what we were talking about. It's fascinating watching what is really financial engineering, but they seem to be popping up in every country all over the place. They're, popping up like mushrooms. And really the conversation revolved around two things. One, how kind of insane it is to watch these structural bids show up. Saylor really pioneered this company idea in 2020. And here we are 5 years later, and we're now actually seeing that playbook come into effect. But obviously there's a lot of people saying this kind of looks like an exciting phase, but also you can see the risks starting to build up. So I want to talk about these treasury companies and just do a bit of a snapshot overview. I explored a lot of this with our Orange members late last month. And this is certainly something that I am still absorbing myself, trying to get my head around it. But there is definitely a structural bid coming in, but there is also a concern that we should all be aware of that these things aren't all that rosy. And Preston Pish had a fantastic line, which I'll talk about shortly, that was my personal biggest takeaway, which is really obvious when I say it. I'll hold the suspense for now, but really obvious when we get there. It'll make a hell of a lot of sense. So today we're going to look at really the bid side of the equation, the ETFs and the treasuries, because they've been treasury companies. And they're really two of the biggest ones that have shown up, certainly this cycle. We'll do a bit of a snapshot of whether we're overheated in our current conditions. We're trading 109,300 as we speak. I think I left Seoul and we're like 107K, and I landed, we're 110K. So it's been a nice little pop higher, pushing up towards all-time highs. And we're going to look at realized profit and the expansion of leverage. So really, I think a good kind of subtitle for this piece is acceleration. It feels like we're moving into the acceleration phase where things can get pretty wild, pretty volatile, pretty quickly. It's going to be a fun ride. Let's get stuck into the charts. All right, so let's just start with our overall market structure, get a bit of a view of things. Now, we are pushing up towards the previous all-time high, which we only set a couple of weeks ago. I've been ribbing a few people on Twitter who are like, if Bitcoin doesn't go to a new all-time high, it's like it was at an all-time high 2 weeks ago. This is one of those things where, look, when I look at this particular price chart, the big zoomed out scale, the monthly scale looks fantastic. Just looks like it wants to keep going higher. However, you can, we talked about this when I talked about the potential double top. And to be honest, much of the analysis from that remains the case. I would like to see us get some proper momentum and get above this high. Until we do, there is a potential that this can start to flag out. We did break to a low here. Yes, we've got a high, but you can imagine if this starts to roll over. We can't predict how this goes. It really is a demand side of the story. Of course, supply is a component too, and we're going to look at all of these different facets. But much of the analysis I had in double top, potential double top, it remains. We still have a very, very quiet on-chain market. It's like nearly empty blocks, which is certainly something I'm paying attention to. But then also I wanted to kind of peel back, and we're going to look at ETFs and treasury companies today, because a lot of their activity is going to be off-chain, right? That's going to be things where people are actually buying coins, and they're not going to be necessarily transacting, probably large volumes, but not a huge number of transactions. So just some things to pay attention to. We will see how this resolves. Now, my general framework, let me just bring in short-term cost basis. I think this is a nice way to just simplify everything. My base case, and this is something I actually had a presentation on the other day, I allow myself to be bullish. Both check the hodler and check the analyst. I am allowed to be bullish when we are above the short-term cost basis. Because when we're above it, it is, typically speaking, good times. And generally speaking, we've defended that level back here. I am not too concerned until we get down below the short-term cost basis. Now, it is starting to climb. Profits are being taken. Coins are finding their levels higher. 97.5K is our current level. Whilst we're trading above this zone, and I do expect it to act as support, until we lose it, I'm not too concerned. If we do lose it, I think we become concerned. So that's just a nice simplified threshold to pay attention to moving forward. Now, let's start with the ETFs because they have been really the major dominant factor in terms of new demand that's come in. By my calculations, there's somewhere between like 20 to 25% of any kind of period of time in terms of demand. So a very, very significant, right? If we're talking about a quarter of the market, they are non-trivial, and we should pay attention to them. Now, the AUM's up here at about $135 billion. Now, for context, when I did my talk in Seoul, I was talking about the Bitcoin versus the gold ETFs, just to give people a sense of scale. At least according to my quick checks, but also, you ask Grok and just say, hey, AI, Mr. Model, go and find out what the AUM is of global gold ETFs. The result that came back was something on the order of about 270 billion. So if we're at 135, these ETFs have been around for like 17 months. And we're already 50% of the size of global of gold ETFs. Really quite remarkable as a stat. So, Bitcoin's kicking ass. It really is. And you can see that the AUM is obviously climbing with the price. But also we're seeing meaningful inflows, which will be the next chart. Now, the inflows we've seen since April is about 10 billion out of a total of about 44 billion or 45 billion. Right, so we're seeing about 22%, I think, or thereabouts come in over since April, which is non-trivial, a pretty meaningful chunk of the overall net flows. It hasn't quite been as long and sustained as we saw back here in November, and really not quite the same. Well, maybe a similar magnitude that we had back here. I think that got up to about the same, 10 billion or so on the first leg. Granted, Bitcoin was much smaller. Remember, this is dollars, so as a result, we're going to buy less Bitcoin in this particular leg, but nevertheless, it's a consistent, sustained uptrend, right? We're seeing higher highs and higher lows. I don't really want to do TA on these things, but generally speaking, we're seeing a growth of inflows. So the ETFs have really kicked ass. They continue to kick ass. I think this is another chart that I flagged at my talk. When we look at the outflows, and we've talked about this before, let me just refresh. If we just take a snapshot, I took an average of all of the outflow weeks. So this is the total weekly inflow or outflow to the ETFs. On outflow weeks, what is the average outflow? And on inflow weeks, what is the average inflow? Now, just visually, you can see that when we're below the zero bound, which is an outflow week, the bars are not as big as the inflows. And for a bit of a sense of scale, the average outflow is about 160 million. The average inflow is 775 million, 4.8 times larger than the average outflow. And even these very large outflows we saw back here in March, I would bucket this as largely structural in nature, because if you overlay CME open interest, it declined by about the same amount. So in my book, that looks like tariffs have hit, the market's kind of a bit tumultuous, and people have just taken risk off the book. And some of that risk is a cash and carry long ETF short CME futures. They just unwound that. So it really wasn't like a loss of conviction. It was more so just a structural, I've got to get risk off the book along with everything else. More of like a correlation one type event. And since then, you can see on the rally higher, the inflows are just incredible. 1 billion, 2 billion, 3 billion, right? We're getting very, very serious inflow volumes. Now, it's been a little bit softer over the last couple of weeks. Price is kind of correcting a little bit in that time, but still, overall, nothing really that severe. Generally speaking, inflows are much larger than outflows. The demand story is stronger than the sell side supplier story, hence why we're trading at 109K. So far, so good, honestly. Now, the Treasury Companies. This is a huge market in the sense that they're popping up everywhere. There's kind of one in every country now. They're appearing like wildfires. This is both a structural bid for Bitcoin, which is quite bullish. It's also kind of terrifying because you can see how the leverage can really build up. There's going to be a lot of people who are going to speculate on these treasury companies. There's a few different ways people would like psychologically why. People who are late to the Bitcoin story might treat these like your altcoins, and they will go further out in the risk curve trying to juice their returns because they missed the Bitcoin story, right? A lot of people, including people in the crypto industry, as demonstrated by Bitcoin dominance, they have missed this move. They expected alts to do far better. And suddenly there's this new crop of alts called Bitcoin Treasury Companies where people can essentially pay a premium for it, but then if they keep juicing the returns and the stock price goes up more than the Bitcoin, then you win on a fiat basis. Now, at some point in time, right, this is largely dominated by strategy here in orange. The more of these copycats come into the mix, not everybody has the stones and the shareholder buy-in that Saylor does. There are good CEOs and there are not as good CEOs. And I'm not making a comment on any specific company. I'm just saying the longer this trend goes, the more, let's say, altcoiny they will become. They will no longer be like Strategy, where they've clearly got they've got a behemoth of a company and a clear strategy, right? Maybe this is why they've called it this. Nevertheless, they do have a plan. They're big enough. They're the 800-pound gorilla. There are going to be smaller ones popping up. They're going to be speculative. They're going to have, not every CEO is going to have the stones that Michael Saylor does. Nevertheless, in terms of the scale of the bid, if we go back, this is the cumulative balance held by all these companies. And to be fair, I'm only tracking a handful of them. Miners, Strategy, so some of the public miners, Strategy, 21, which is, I don't really think, once it does its SPAC, it'll be properly public trading. Metaplanet and Similar Scientific. I know there's more. Over time, I'll add more of them to the suite. But nevertheless, back here in early November, about 300,000 coins. We're now over 720,000 coins. And Strategy represents about 80-odd% of the total balance of these ones that I'm tracking, noting that there are more. But Strategy really is the behemoth in the room. Now, on a monthly basis, this is looking at their stacking rate. So basically, how many Bitcoin are accumulated per month. Typically, and really this is 2025, so we saw a huge burst in November, December. Strategy went on just a crazy buying spree in that period of time. They've since stabilized, and you can see Strategy has stabilized, but you've also got more of these treasury companies popping in. Metaplanet's playing a big role. 21 starting to accumulate, or at least taking coins from Tether and various other sources. Marathon's playing a role as well. Riot's in there. Some of that's mined, some of that's accumulated and actually purchased. Nevertheless, we're seeing something like 30 to 35,000 Bitcoin a month in a fairly consistent fashion, right? It's early in June. We're seeing this fairly consistent bid side. 30, 35,000 on top of the ETFs. This is starting to become a pretty meaningful and structural bid. Okay, so I want to talk about just briefly on STRK and STRF. I've been paying a lot more attention to this. I was having a very brief chat. I wish I had more time to talk to Preston Pish in Seoul. We're actually going to try and do a podcast. So you guys as paid subs, you'll get access to that podcast first. So I want to have a chat with Preston about these STRK, STRF, STRD preferred stocks. I also spoke to our Orange members about this in May's report, because I think this is something that I've certainly got it in my trading view. And the framework that I want to share, and I think it's just a way to kind of, how do we use these treasury companies to look for overheated conditions? When does the market not want to give these companies any more money? When do we see those premiums start to compress? So my simple framework for now, one of them, is I'm paying attention to these preferred stocks for Strategy. Because it is the 800-pound gorilla, I want to know when the market doesn't think he's going to be able to pay those dividends. So these things have a face value of $100, and they started trading like $85, $86 or whatever it was. And you can see they've been on a slow and steady, but very, very consistent trend above $100. So here's their face value at $100. So because these things, and these two in particular, Strike and Strife, because they have Stride, he doesn't have to pay the dividend. These ones he kind of does. So if he's selling $100, the market is trading $100 for $107 or $105, that is effectively dropping the effective yield, because you can buy less shares for the same money, so your effective yield on your CapEx goes down. Now, if the market felt that Saylor would be unable to raise money, pay those dividends, and buy more Bitcoin, in other words, if the market doesn't think Saylor's going to be able to raise money, these things will trade towards and probably below $100. Right now, and we saw there's a bit of a flash crash when Elon and Trump had their spat, and they've since rebounded, right? STRK is trading at $109. So STRK is telling you where the market thinks the stock price goes, because this one has a conversion at $1,000 MSTR. There's a conversion premium, but also it's paying an 8% yield. The effective yield has gone down to, I built this chart the other day, like 7.3 or something like that, because it's $109 rather than $100. So the market is paying a premium for these dividend yielding preferred stocks, which is effectively saying they think he's going to be able to raise money, which in theory means that we probably aren't at the overblown top where the market goes, oh, it's over, right? We're not at the toxic waste phase of this bull market. So this is one indicator that I want to flag, is that this is actually, technically speaking, probably a bullish sign. But as we move down the line, when these start to trade lower, probably and it will probably happen very quickly, I think. Once we get to a top, a meaningful top, I think we'll see mNAVs for all these companies compress very quickly. That's the next topic. I think these will come down very quickly. I think these will be a sign that the market goes, all right, I think this Bitcoin Treasury Company trade is done for the time being. So one to pay attention to. Now, on the mNAV side of the equation, now this is a funny concept. It stands for multiple of net asset value. If a company has $1,000 worth of Bitcoin and their market cap is $2,000, they have an mNAV of 2. If it's $3,000 market cap, mNAV of 3. So it's effectively the premium on top of the Bitcoin Treasury value. Now, the bars that we have here, again, these are the companies that we're looking at, and I've ranked them left to right from highest to lowest mNAV. So basically highest premium to lowest premium on the Bitcoin net asset value. We can see down here, Marathon and Semler Scientific, they're actually at or below an mNAV of 1, which means that Semler is actually trading at a discount to its Bitcoin Treasury value. I would say that these, Marathon is a miner, and again, I'm not going to go into the depths of these, but miners are a very tricky business. There's every reason in the world for them to go bankrupt eventually. So it's going to be hard for them to sustain a premium because mining kind of incinerates capital as a business model. So kind of tough to sustain a meaningful premium. Strategy is slightly higher, about 1.6. So that means that you can see here, this is the Bitcoin Treasury value in the solid orange. And then the premium value is that extra market cap that sits on top, equivalent to about 60% of the Bitcoin Treasury value. So in theory, MSTR is one of the lowest valued on the mNAV standpoint. If we go to 21, and this is trading as CEP at the moment, very, very high premium, same as Metaplanet, 5, 6x, I think it's 4.5, getting to fairly significant mNAVs. But, there's a whole topic going into how we compare and contrast all these different tools and try and use these different metrics to understand the treasury companies themselves. I want the topic here to just highlight that when the market thinks that this market is over and bull market and Bitcoin has topped and these companies are going to struggle to raise more capital, I think these mNAVs are going to compress very quickly. Now, they all have different characteristics. Metaplanet, for example, has the captive audience in Japan. A lot of folks were telling me over in Seoul that in Japan, there's different tax treatment for Bitcoin. It's something crazy like 45 or 50%, I forget the number. There's a crazy tax burden on spot Bitcoin. So as a result, buying a company that buys Bitcoin can actually kind of justify some of it. There's also trapped capital. I mean, that's what Saylor's doing. He's going after trapped capital in US bond markets who just can't access Bitcoin, but, they still want some kind of a return, and maybe the treasury market isn't giving the return they need. So they all have their unique characteristics. But I do think that we're going to see a massive and probably very quick reversion as all these treasury premiums start to collapse very quickly. That will be one of the many indicators that tells us, hey, we might be getting a bit long in the tooth on this thing. That doesn't mean they can't expand a lot more before they get there. But anyway, this is certainly going to be a set of tools and indicators I'll be paying attention to moving forward. And I'm certainly in the process of really digesting it. And I'm really looking for, I'll catch up with Preston and we'll rip that pod to really discuss all these different metrics and dynamics.